Bonjour de Genève. Good morning from Geneva. This is Michael McAdoo, moderator of this session. For those watching on the webcast, we're going to be just allowing a few minutes for our participants to assemble in the room, and we should be started in the next 5 to 10 minutes. Thank you for your patience. the left of the mic. Bonjour tout le monde. Good morning, everyone. Welcome to Geneva. Welcome to WTO headquarters. Welcome to the public forum and welcome to our panel, which is the private sector in the G20, fostering inclusive trade through digitalization. Some of you might have heard of a place called the room where it happens. And this room, in fact, room C and room D are where some of the major WTO agreements were signed historically. And so these rooms, I think, are filled with very positive energy about the future of the multilateral trading system. This panel is going to focus on how that can be enabled through digitalization to improve inclusiveness for many groups that are currently underrepresented in global trade. My name is Michael McAdoo. I'm partner director with Boston Consulting Group. We are the knowledge partner for the B20 Task Force on Trade and Investment, ably chaired by Francisco Neto, the CEO of Embraer of Brazil, and our vice chair, José Serrador, along with several co-chairs, some present today, including my colleague on my right, as well as others from many of the representative countries in the B20. BCG, we're a global consultancy. We have an international trade practice. I'm one of the co-leaders of that. I'm based in Montreal, Canada. And we've been very proud to support the B20 Trade Investment Task Force over the past 5 cycles. So that includes Saudi Arabia, Italy, Indonesia, India, and now Brazil. And I just want to commend the Brazilian team here because this task force was not only the first one to get its policy paper complete, it's also the shortest and most focused task force paper that we've ever seen in the last 5 years. And most importantly, has had the most intensive phase of, let's call it, outreach to different decision makers, including the G20 and others, to make sure that these recommendations are heard. We're having this panel today. We got to present to the Trade and Investment Working Group in Brazil and Rio de Janeiro about 2 months ago, Francisco, Jose, and myself. And we're actually going to be putting our policy paper in the hands of the Director General herself tomorrow here in Geneva. So I really want to commend the work that's been done. I want to just take a moment and introduce our distinguished panel. So on my far right, on your left, for those in the room, we have Sam Matthew, and he's the head of financial institutions and documentary trade for Standard Chartered Bank. That's one of the world's leading trade finance banks. So has direct experience with how trade is actually financed and conducted. Next on my right is Busi Mabusa, and she is the chair of the Industrial Development Corporation of South Africa. South Africa, of course, will be the next host of the B20, so she'll play an important role, I think, going forward, and she'll talk about that later in the panel. On my left, my old friend, José Serrador, who is the Global Vice President, Institutional Relations of Embraer. This is the world's largest manufacturer of regional aircraft and a big player in other parts of defense and aerospace. And then finally, Anata Amaral, and she's from the Brazilian federal government. She's Secretary of International Affairs in the Ministry of Planning, Budget, and formerly Gestion Management, but I gather that's been removed. I hope you're still managing things. Despite a lot. So I think a really great panel. And you'll see that this panel is co-sponsored by a very important organization, which is the CNI. That's the Brazilian Confederation National of Industries. And I want to call out Gabriela Leone. Please stand, because Gabriela has done an amazing job. She's not on this panel, but she has every right to be, because she's done so much to make this task force work effectively. So thank you, Gabriela, for your work. So we're going to start covering a number of our topics. And again, the broad theme is inclusion through digitalization. We're going to cover how that affects trade and customs, but also the trade finance gap. This is an important theme that we've raised in the past as a B20 group, but there is a lack of trade financing capacity, and there's ways to close that gap to make financing more accessible to groups that are not currently represented. We'll also talk about the role of women and how they can participate more in trade, and how digitalization can actually help women and others get more involved in trade. We'll talk about the role of the B and G20 in determining the global trade rules and how they can help advance that. And then finally, a look ahead to the South African cycle, where Busi will take us through some of the priorities that they'll be bringing into the cycle for next year. So I think I'd like to just start with a brief explanation. So for those who don't know, the G20, of course, is that group of some of the 20 largest economies of the world. There's 20 nominal members. There's a few additional members. Importantly, last year, India was able to invite the African Union to participate. So now we have a body that represents the more or less 54 countries in the African continent to be part of the B20 and G20 processes. And the B20 is the business group that feeds into that. So there's a number of these advisory groups that have been set up. But I think the B20 is particularly significant because it's been very consistent and also very focused on providing recommendations. And so what you'll see is a policy paper that we're releasing today. It'll be available live, and we can get a link to you on that, but it actually sets out a set of recommendations that we're making to the G20. That's what we're involved in with our advocacy campaign that's going on right now. And I'd like to open the panel by asking Mr. Serrador to take us through what some of those recommendations are and how we're planning to help use these recommendations to improve inclusiveness in global trade. So, Mr. Serrador, floor is yours.
Thank you very much, Michael. It is a pleasure to be here today. I'm excited to share the key recommendations from our Trade and Investment Task Force, which reflect the G20 private sector's view for advancing global trade and investment. But before I proceed with the recommendations, let me briefly present the task force itself. The task force is led by Francisco Gomes Neto, CEO and President of Embraer, and by me in the capacity of his deputy chair. We also count on the support of the nine co-chairs from a diverse group of G20 countries, as you can see in the slide. Secretariat is done by CNI in Brazil, and BCG is the knowledge partner of the task force, and I take the moment to thank very much for the support from BCG and CNI in this process. In addition to the leadership team, we have over 180 members in our task force. The group is extremely diverse, comprising members from all G20 countries with nearly 40% of female representation. We have also significant sectorial diversity, with manufacturing sector leading, but with representation from other 15 sectors. To develop a policy paper, we conducted 3 negotiation cycles over 6 months and received over 360 contributions from members and the co-chairs. This demonstrates a high level of engagements from the participants. We put forward 3 recommendations to foster a more inclusive, resilient, and sustainable global trade. Here we took, there was a lot of energy put to try to be as concise, as objective, and as pragmatic as possible. And the recommendations are improving global governance of trade and investment, promoting more sustainable and resilient global trade, enhancing the efficiency of trade. As we all know, the multilateral trading system faces challenges such as inefficiencies in the WTO dispute settlement body and difficulties in reaching new agreements. Moreover, the current geopolitical scenario has affected global value chains, and global governance become even more critical. So in our first recommendation, we propose restoring and reforming the WTO dispute settlement body, enhancing the efficiency of WTO notification and consultation systems, and formally engaging the private sector in the WTO. We advocate for upholding existing agreements and advancing new multilateral and plurilateral agreements. We focus on 1, advancing negotiations on the joint statement initiative on e-commerce, and 2, converting the agreement on investment facilitations for development into a multilateral deal. Additionally, we emphasize the importance of accelerating negotiations on trade and sustainability. Our second recommendation is to promote sustainability and resilience of the global value chains. Global value chains have been dramatically impacted by recent changes in economic and geopolitical dynamics, leading to a growing number of trade restrictive measures. Additionally, there is a growing number of regulations related to climate change that are significantly impacting cross-border trade. While we understand the importance of addressing climate change and fully support this agenda, fragmentation of these regulations is creating complexity and inefficiencies for companies to navigate. Considering this scenario, we recommend that the G20 promotes internationally accepted methodologies for carbon footprint calculation and to agree on good regulatory practices for climate change regulations. Besides that, we also advocate for defining taxonomies for green regulations. Furthermore, we suggest a review of unilateral trade restrictive policies implemented by the G20 countries over the past few years to ensure they do not undermine global value chains. By addressing the topics above and by establishing sound regulations, countries can facilitate a faster transition to a net zero economy for companies while ensuring free trade flows. Our third and last recommendation we focused on is enhancing efficiency on trade. Enhancing efficiency is particularly important for MSMEs and women-led businesses, which often find barriers in accessing international markets due to complex customs procedures and limited access to trade finance. Therefore, to increase trade efficiency, we propose countries to: 1, to adopt digital standards for customs clearance, and 2, to improve international coordination for cross-border flow of electronic information. Implementing cross-border paperless trade measures can reduce costs and increase the participation of LDCs, MSMEs, and women in the international market. We also call for increasing access to trade finance and by digitalizing trade and an enabling regulatory framework, and strengthening government export programs to further support MSMEs and female entrepreneurs. And addressing the point on how these recommendations will foster more inclusive trade, we understand that implementing these recommendations will help create a more inclusive global trade environment. A robust multilateral trading system with clear rules and effective disputes resolution will ensure a level playing field for businesses. Harmonizing green regulations will particularly benefit MSMEs, LDCs, and women-led businesses by reducing complexity and costs of compliance. And lastly, the digitalization of trade will lower costs, increase market access, and the offering of trade finance, driving inclusive growth across all economies. Thank you.
Thank you very much, Jose. I think that's a great expose of the recommendations we have. And I think, as you can see, they're very practical, they're very actionable. They don't require multilateral institutions to have complete unanimity to implement them. There are things that individual countries or groups of countries can do to advance this agenda. I want to turn now to the aspect of
our papers. Maybe.
Oh, sorry. And I should mention, yes, you can access the paper there. There's a QR code. And so for those in the room, and I think online, you can see this as well. If you just click on that code, you'll get access to the complete paper, which is live and available electronically. Thanks, Jose. So turning to the digitalization aspect, this is really important, right? We're seeing the great proliferation of digital technologies. We're seeing, particularly in the developing world, digital accessibility is leapfrogging traditional connectivity via landlines and other kind of fixed infrastructure. And I think that's a big opportunity. We've seen that digitalizing the trade ecosystem, including customs processes, can reduce complexity, enhance transparency, cost savings, and market reach for participants in trade. What you're seeing is that previously non-tradable things become tradable. Think about healthcare, education, things that you used to have to physically deliver with a person can now be delivered digitally, and that's important. Just as a measure of this, the OECD says that digitally delivered trade now represents 25% of all global trade. That's a 2023 statistic. And then as a subset of that, the way we can digitalize customs procedures. So instead of big bundles of documents following products around or pre-following services, if you can digitize this, you can actually significantly cut costs. I just want to say that the average trade cost can be reduced by about 14%. That's according to UNCTAD through digitalization of customs procedures. And that's actually very important because paperless, in particular, cross-border, can reduce costs by 69%. So we think about how to get people more involved in trade, reducing these administrative barriers. They've got the product, they've got a customer in another market, but it's these impediments that are done by the paper-based trading system. So the digitalization is really, really important. I think the other aspect is when you've got this type of trade facility, it's easier to attract foreign investment. If someone's coming to a country and they know they can easily get their product in and out because of digital systems, it's much easier to convince them that that's a good location for a manufacturing facility or a distribution facility. So very important. I'd like to turn now to Boozy and just say, in terms of the recommendation 3, the policy paper on digitalization, how do you see this attracting the participation of more LDCs in developing countries into the global trading system? Is there something you could bring from your own experience in South Africa and elsewhere?
Michael, thank you so much for that question. It was a privilege to be part of the B20, Brazilian B20 chairship, TNI task force, and the development of the policy paper that's been released today, whose recommendations are actually so relevant for the least developed countries, such as the countries that actually are highly concentrated in my continent, the African continent. The LDCs, of course, have a tremendous opportunity to expand access to affordable digital technologies because of the low base at which they currently stand. For example, in manufacturing, many LDCs are said to still use analog technology in their manufacturing processes. This is in an age where you're no longer just talking about digitization, but you're also talking about artificial intelligence and other very advanced technologies. It's reported that less than half the population in LDCs has access to 4G mobile networks. I was stunned when a report was released by one of our research agencies in South Africa called MISTRA, in partnership with one of our flagship listed entities, Naspers, where they indicated that only 20% of South African households have access to broadband as we stand now. That is a shocking, absolutely shocking statistic for small and medium enterprises who normally use informal facilities for their businesses and therefore would not have access to the broadband that's needed. This underscores the urgent need to expedite e-commerce enabling reforms, as is advocated by the policy paper, and to scale up international support to realize the digital economy's potential in those LDCs, and of course, the other emerging and developing economies. On the positive side, I'm excited that earlier this year, African heads of state adopted a draft protocol to regulate digital trade. And this is, of course, under the auspices of the African Continental Free Trade Area Agreement. Though the AfCFTA and this protocol remain aspirational at this point in time, in my view, they are a significant indicator of the direction of travel that the continent is keen to embark on. Tailwinds that are supportive to this, of course, include the youthful population that resides in the continent, aspirational population that is not afraid, that adopts very easily and very readily to the digital platforms and the opportunity. So it seems obvious and I believe true that the world's largest untapped digital growth potential lies in these economies that we're referring to now. I therefore believe that the advocacy for digitalization is important, as it will open up the doors of global opportunity for small, medium, and micro enterprises that are in these far-flung out areas. It is already indicated by Jose, to lower marginal production costs, should lower distribution costs. However, the burden is the upfront investment, which most small and medium companies, of course, find quite onerous to get into. So support from business associations and governments will be absolutely critical. The opportunity here was summarized by a professor from Wits University, University in Johannesburg, South Africa, who argued that real GDP will be redistributed through digitalization. So I think if we were to take the least developed economies and the emerging economies along, we need to consider the recommendations as have been proposed in this task force policy paper very seriously. And I hope that everybody agrees with that. Thank you.
Thank you, Busi Mabusa, for that. We appreciate those comments. And I think it's interesting that this is something that doesn't just help at the country level, but at the level of individuals and also small companies. Now, this is not without its challenges, right? These things are sometimes hard to do. And I'd like to come back to Jose Sarador and just ask, what do you think some of those challenges are and how can they be overcome?
Michael and Busi, you provided an excellent overview of the benefits of digitalizing trade and customs. I'd like to highlight specific challenges that needs to be addressed to advance this agenda, along with potential solutions proposed by the B20. One of the main challenges for the digitalization of trade, customs, and trade finance is the matter of data localization. The acceleration of internet penetration worldwide is undeniable. However, we have seen shifts towards more restrictive data localization rules, which imposes more stringent local storage requirements and rules on cross-border data flow. According to the OECD, more than 60% of the trade barriers to digital services are related to infrastructure and connectivity, including barriers to data flows. The B20 Trade and Investment Task Force proposes that countries promote discussions towards an agreement on electronic commerce, which would establish the free flow of that data while ensuring data privacy, known as the data free flow with trust. Second challenge to be addressed is regarding customs clearance. Streamlining customs procedures and digitalizing them can help lower trade costs, ensure the timely delivery of critical goods, and enable greater access to international trade of LDCs, MSMEs, and women-led businesses. Despite the progress made with the partial implementation of the WTO Trade Facilitation Agreement, several key provisions of the agreement are still lagging behind. For instance, the global implementation of the single window is only around 57%, with a striking low 15% implementation rate among LDCs. Similarly, the adoption of authorized economic operators programs designed to expedite customs clearance for trusted traders remain also as one of the least implemented measures of the TFA. Moreover, there are additional challenges and opportunities for the digitalization of customs processes that are not covered by the TFA. In that regard, one of the key challenges is the lack of interoperability of customs management systems and of a common digital document standard. Our task force asks G20 countries to work in order to define a common customs management system among the G20, and also the adoption of a document standards that is recognized by a multilateral organization. Finally, none of these recommendations will be effective if countries lack the proper digital infrastructure and their populations do not have access to universal and meaningful connectivity. In this context, the B20 recommended that the G20 countries support the digital transformation in LDCs by establishing funds to assist these nations in their digital journey.
Thank you, Jose Serrador. So a lot of technical recommendations there, but as I mentioned before, a lot of these things can be done not at the multilateral level alone, but also at the level of the G20 itself, or even subgroups of countries. And that's what we'd like to see as a business community. I'd like to turn to another point we wanted to cover, which is the trade finance gap. And as I mentioned, a lot of trade needs to be financed. In fact, about 80% of trade relies on some form of financing. And that's according to the Asian Development Bank. But there's often this mismatch between the demand and the supply of that trade financing. And the gap has been measured as $2.5 trillion in 2022. That's a 47% increase from just 4 years ago in 2020. So very important that, and when you think about that, total global trade in goods is around 30 trillion. So the gap is getting close to 10% of total trade volume in the world. So it's a significant number that we're talking about here. The ADB report that I just cited also mentions that MSMEs, so micro, small, medium enterprises, are disproportionately affected. 45% of their financing applications are rejected by lenders versus only 24% for multinationals. And so this is a very serious problem for those smaller companies, and there's many reasons for that. The other group that is suffering from this trade finance gap is female entrepreneurs and traders. 60% of female respondents said in a survey that was co-sponsored by CNI of Brazil and by BCG, 60% of female respondents struggle to get financing, compared to about 40% for male respondents to that survey. So you can see this gap is affecting some of these groups. And I'd like to bring in Sam Matthew on this one. So how do you see this? I mean, you are one of the very top global trade finance banks. How do you see this from the rock face, and what do you think can be done about it, please?
Thank you, Mike. Sorry for that. Thank you, Michael. Good morning. Being a practitioner on the ground with one of the largest trade finance banks, there are many challenges in this space, but let me touch on a few. So according to the ADB, as you rightly said, 2.5 trillion is the trade finance gap, and a large portion of that is in the MSME segment. So if I do touch on a few of them, one is this segment is based and made up of a large volume of very small clients. Very often not very sophisticated, very often, as you see touched on, not very mature in terms of their own processes, not very high on the risk scale in terms of maturity of risk, so very risky in many cases. So what happens is, as a lender, it is often very difficult from a regulatory perspective to meet the KYC, know your client, CDD requirements for lenders to onboard thousands of these small clients. So that's one practical problem. And for the clients too, understanding all the regulations, the import restrictions, the tariffs, and getting that in a seamless manner where they understand that for the corridors they are dealing with is very often a challenge. So they need a lot of advisory and guidance. From a risk perspective, as I said, many of them are very low risk grade. So from a risk return perspective, it also becomes a challenge for lenders to lend into this segment on a large basis. And coming to capital, for example, with Basel, trade as an asset class has been, there's been stricter regulations in terms of capital, and it's only going to increase with Basel 3.1 and 4. And therefore, the opportunity and the cost to serve that segment in particular is going to increase for private lenders, especially the regulated commercial banks. So that, I would say, are the 2 or 3 key challenges. There are more, but I would say across the cost to serve and cost of coverage, the risk profile of this segment, very often there's not even audited financial statements or audited financials. So how do you onboard and write risk on these counterparties? And then the cost of capital of doing so.
So are there things we could be doing as a G20 group of countries to try to address some of these things? Because they sound fairly structural as you list them there. Any thoughts on that before we move along?
Sure. There's already work happening, Michael, and more can be done. Let me touch on a few. One is going back to the point on onboarding and KYC and coverage. I come from Singapore, and in Singapore, for example, as a retail client, I can register my profile with a portal called SG Findex once, and then I can open an account in any Singapore bank within a minute.
So the financial authority runs this portal?
That's right.
And then any financial institution can access that profile?
Correct.
And
Correct.
the impact of that is?
The impact of that is real efficiency and cost in terms of the KYC requirements, the banks have to deploy in terms of onboarding me as a client. Now that's retail. So why can't we think about, as G20, B20, country level registries for KYCs for MSMEs in particular, such that it eases the pain of the banks onboarding them. So that's one thing to think about. Easier said than done. It will require investment and capital to do so, and some regulatory intent to do so as well. So that's one. Second is we partnered with a fintech, again, an example in China, to kind of work around this onboarding challenge, right? And the KYC challenge of onboarding thousands of small clients. So we partnered with a fintech to do what we call deep tier supply chain finance. So the way that was done was you have a large buyer, and there's a level 1, level 2, level 3 suppliers supplying components that eventually translates into a product, mostly SME, MSME suppliers, that then is sold to a large buyer. We were able to take the risk of the buyer post shipment and post acceptance of the goods to then prepay or early pay the suppliers. And we went up to tier 11 using tokenization and crypto technology to take that one payment of $100, fractionalize it, and pay it level 1, level 2, level 3, level 4, level 11 suppliers. So you go deep into the supply chain without having to onboard all of these entities as clients of the bank, right? Sanctions clearance has to be done, but you're essentially taking good risk to go deep into the supply chain. So that's one example. There are more, but I'll hand it back to you, Michael.
I like that. Very, very on point for the notion of this panel, which is technology can be a big help in that accessibility, right? So that notion that you take the risk of the ultimate customer. Think of an Embraer. You've got many, many tiers. Those small tiers are the people that are suffering from financing, but now we can go under the Embraer umbrella and go look at those things. So very interesting example. I'd like to bring in Renata now and talk about just how some of these things are affecting female traders in the system, and some things you think might be appropriate to do in terms of addressing some of those concerns. Renata.
Thank you, Michael. Very interesting panel. Thank you for inviting me. I'll start by saying that, Vera, if you think the world is hard for women in trade, talk about finance. Wow. So I think the trade finance gap is really undeniable. It affects women way disproportionately. And from my short experience now in finance for the last 2 years, I see that women are underrepresented in all levels of finance, but they also face obstacles as users of the finance system. And these difficulties are associated to a number of factors. I'll list some of them, but also I think there are opportunities that we could explore better. There are some interesting reports out there, especially from the International Finance Corporation, IFC, on this. And there is one specific that I would like to bring along, is the banking on women who trade across borders. And this report is important. It's value to reference because I believe it provides a comprehensive analysis of the issue and the obstacles that women face. According to this report, women access to finance is limited both by their business characteristics, and by their own personal features. And Buzi mentioned some of the difficulties that you have on your region. Of course, there are several examples from Africa and other regions of the country. Women-led businesses tend to be smaller and concentrated in sectors such as retail services and agriculture, which are often less attractive to financial institutions due to the risks associated to these activities. So the risk is one of the problems of the activities that women normally lead on small and medium enterprises. But also there are two other big problems. One is the fact that SMEs often lack the capacity to absorb the costs of financial services associated with cross-border transactions. That is due to the processing complexity, since cross-border transactions involve more compliance and legal requirements than transactions within one jurisdiction, right? And the second problem they highlight is the information asymmetry. The SMEs usually have a limited track record which makes it difficult for banks to access the credit worthiness. We're just mentioning something on those lines. Since women leadership is more concentrated in small and medium enterprises, these factors directly affect women access to trade finance. In addition, women who lead business tend to have an average lower financial literacy and managing experience as compared to men, and that's data. This leads to a higher risk perception to such businesses, which implies higher interest rates and collateral requirements for women. In this context, the gender gap in asset ownership caused by cultural practices and sometimes reinforced by legal codes limit women's ability to provide guarantees to access finance. The gender gap in strategic jobs in the finance sector, like investment decision-making position, aggravate women's access to finance. And I would like to give you 2 examples from the public sector in Brazil, the finance public sector. And before I give you those examples, just to maybe make an example of a personal example of what is happening, at least in my country. After 55 years, I'm the first woman secretary in my secretariat. It exists for 55 years, and it deals with access from multilateral banks, external financing. We never had a woman before. And this was shocking for me. I really didn't know about that. And of course, as a woman, and I have a minister woman, we decided to check the numbers, right? And it was not a good experience. When I took office last year, we ran an assessment of female participation in projects approved with public guarantee, with sovereign guarantee that we deal with from multilateral banks. And it turned out that from all the projects that we have, and we have more than $40 billion in the country in external finance, only 8% of the projects were introduced by women. Not 8% won the sovereign guarantee and the financing, but 8% were presented by women. And this was shocking for us, by women-led entities. And these projects—
And what was the success rate? Was it similar to men, or did they have a lower success rate as well?
Lower, very, you know that, yeah, lower. And what we did in the ministry, when we saw those numbers, we started this year capacity building program for mayors, for secretaries of states from the states and municipalities of the country, to teach them how to build a project, how to have access. Because it is a man business overall, the knowledge on accessing external finance in Brazil, at least, it passed along from men to men, and the mayors, the secretaries, they don't have access to the knowledge, and they don't even know the opportunities are out there. So that was very shocking for us. And also, just one more example from the federal government in Brazil is a recent study done by our Ministry of Trade and Industry about women representation in Brazil's foreign trade. And the study found that only 32.5% of the employees from all Brazilian companies that operate international trade are women. For companies not involved in foreign trade, the rate increases to 40%. And in terms of leadership, that study showed that only 14% of all exporting companies are mostly owned by women. So it's shocking. The numbers are very bad. And I mentioned very in the beginning because we are together in this Women in Trade organization. We do studies together, we publish together, but finance is even worse, way worse than trade.
And maybe a follow-up, one of our themes in this panel is digitalization. So how do you think digitalization of trade and trade-related activities could help some of these challenges that you've laid out so eloquently?
I think that, and there are studies out there also on the digital gap. And that's also scary between women and men. But the study I mentioned earlier from the IFC has also found and this is interesting, just as introductory remarks on that issue, that women representation in companies leadership tend to decrease as the size of the company increases. So it means that SMEs tend to have a larger women representation in leadership positions. And women inclusion in foreign trade can benefit from policies, of course, and measures aimed at reducing fixed costs for companies to enter foreign markets. But that is because those measures facilitate, right, access to smaller companies, which usually have larger women representations. And the data shows that women-led firms are in average smaller than average size of firms that request trade finance. That's also important. So therefore, coming back to digitalization, it is key. It's a key instrument to amplify access to trade finance. It simplifies and reduces costs of transaction processes. It makes the process quicker, simpler, etc. It also minimizes the risks, but there is an increasing digitalization in trade transactions. Although it exists, it's not enough, right? Not enough to reduce the gender gap we see in those areas. It is essential, in my view, to provide women the enabling conditions to take advantage of digitalization, but that also we need to remember that women face way more barriers than men in digital inclusion. And it has to do with affordability, lack of education, barriers to access, and that Buzi mentioned some barriers to access to the digital information and cultural rules as well. So thinking about worldwide problems that we have, not only my region or our region, there are cultural challenges there as well. And these obstacles overall, they prevent women from benefits from digital transformation as a whole. It contributes to deepen gender inequalities instead of overcoming them. So my final take on that is that to women to fully benefit from trade digitalization and amplify access to trade finance, we first need to promote the effective inclusion in the digital world, which is a huge gap still.
Thanks, Renata Amaral. I maybe want to go back to Sam Matthew just to sort of close this section. So you didn't specifically mention women in terms of the accessibility. Does any of this resonate? Are you seeing this in your data as one of the world's largest trade financiers?
I absolutely do. In fact, I wanted to comment on that point, Michael. Thanks for passing the mic to me. So a couple of things. Based on our own data, Standard Chartered Bank data, our MSME customer base, only 20% is women-led. So that number is quite low. And if you look at Asia and Africa, the number is even lower, right? So that's one. But where there's a will, there's a way. So if you look at what we have done, so we have launched something called as a SC-WIN, Standard Chartered Women International Network, with an aim to lend $1 billion to women-only businesses in the MSME segment in Asia and Africa by 2028. And we are well on our way to do that.
How does that compare to your book today? Like, is that a doubling of it, or is it like, how big would the book be today, do you think?
It was roughly, it started from zero from a woman perspective, a very low number.
Okay.
So if you take the woman-led MSME businesses, that number was very small, hardly anything to write home about. It's a really huge increase. So that's the specific action we have taken. So I think the private sector has to put some specific targets upon themselves, right? This is not regulation telling us to do so. So you have to do that. ITC, I don't know how many of you have heard of ITC, International Trade Corporation. So they run an initiative called She Trades, and we work with them. And they have about 3 million women members that connects. They provide advisory, some of the challenges both Bushki and Renata mentioned, to women entrepreneurs in terms of import regulations, trade advisory, and also connecting them to capital, right? So I think that's an example of something good that's happening in the industry. And WTO's own, the World Bank pioneering initiative of WE Connect, We Connect International, we are one of the signatories for that. So I think there's stuff happening, but the intensity of that has obviously need to go up, and we need more participants to come in.
Thanks. Well, it's great to see the private sector taking an initiative like that on its own without, as you say, without being cajoled into it by regulators, whether they be multinational or national level regulators. I want to move and I want to leave some time for some questions from the audience at the end. But let's come back to why we're here. We're here because we are the B20. We represent business to the G20. And I'd like to go back to José Serrador and just ask, what do you think Brazil's legacy will be from this cycle? And how do you see things looking in the future as a result of Brazil's chairship?
Thank you, Michael, for the question. Well, I think that the first are the trade and investment recommendations. We have worked a lot. We were very selective, very concise. And the idea of the B20 has a 1-year cycle. So the idea is to have the recommendations from one cycle to be considered on the following cycle. So we can move on, because these recommendations, they are not going to be fully implemented in one single year. So one of the things is to make sure that the country that receives the B20 presidency make sure to consider at least most of the recommendations from the B20 Brazil. The second topic is with regards to the mapping. When we received when we started with CNI and BCG the work, we have no clue of what would be the country's positions on the various topics. So what we did a comprehensive mapping. We call it a tracker that we're going to hand in to South Africa. So South Africa will receive day one a comprehensive map of where all the countries reside on the recommendations that the B20 is presenting. The second thing is B20 Brazil is putting together some sort of guide or manual to help structure the B20 in the various task forces. For example, the way we structured the co-chairs and selected the countries represented in the co-chairs was key to advance the negotiations and to shorten the time of the negotiation process. So this manual is also going to be delivered to South Africa. So South Africa on the day one will have both the tracker of all of the countries' positions in the many of the G20 topics, in particular the trade and investment, but also this manual with the highlights and things that go right, things that went wrong, and things that we learned throughout this this process. In the last initiative, I think Renata brilliantly has presented, is the collaboration between the B20/G20 with the Women in Trade initiative. We have put together a lot of effort in trying to enhance participation. Just so you know, the first time we opened for registries of the 180 members of the task force, the first round, the percentage of women registered was very low. We decided to do a second round specifically to increase. And these are like small initiatives that you can do to increase women participation and consider throughout the process. So again, we expect that the South African presidency also considers this perspective. I think these are the three main legacy points that I would like to share. And we count with our good friend Buzi to convey the message to South Africa and make sure that we have those considered in the next cycle.
Thank you, José Serrador. I'm going to pass the floor now to Busi Mabuza and give us a look ahead to the future. What are you thinking about? How do you think South Africa will take this? And then we'll open this up to the floor and online for some questions.
But I don't even need to say, Jose can tell you, there is a very receptive team, not just waiting in country, but also that has been to Brazil to already consult and get those pearls of wisdom. We were, I didn't get a chance to just give Jose heads up that yesterday we were in a meeting with the South African representative to the WTO on the advocacy work as well for the outcomes of the B20 TNI. task force, very well received. He's now already arranged another meeting for today on these outcomes with a team of colleagues from the country. So South Africa, I would expect, of course, we are going through a very interesting consolidation phase, having just come out of very exciting elections in May, and government of national unity that was settled within weeks thereafter. Still having wobbles, but largely directionally engaged and enthused and ready to carry the flag forward and ensure that the economy is assisted or reignited out of the kind of doldrums that we have been suffering under for quite some time. You will find a country that, first of all, wants to build on the efforts that our Brazilian counterparts have done to induct the African Union into the G20. So as we speak, there are plans to start stakeholder engagements with our counterparts in the rest of the African continent to ensure that their participation is elevated and that it is right from the beginning of our chairship. In that regard, I believe that the opportunity that the aspiration of the African Continental Free Trade Area presents to the continent and to the rest of the world will probably move up in terms of priority areas. And I trust that the rest of the world sees this as an opportunity for the global economy, because you can't have an interconnected continent that only trades amongst itself 17% of the goods that are traded. It doesn't make sense. It will be accretive to everybody to lift that intra-Africa trade. Secondly, trade and investment is critical, because to unlock the AfCFTA, to unlock the opportunity that global trade presents for our continent, it will lie in how we approach the trade and investment area. And I believe that the work that has been done by, may I claim a little bit of kudos as well, by our task force has received very warm welcome from our business unit in South Africa, which is the CNI equivalent in South Africa, and they're looking forward to pushing that agenda going forward. Engagements have already been had, and thank you to the Brazilian counterparts, with partners. BCG, for example, has had several engagements, and I actually am hoping that BCG will be a knowledge partner, because it's important to have seamless transition and a build up of the recommendations and the work that the B20 does, and the recommendations that are taken to the G20 in order for the momentum to lead to impactful outcomes on the ground, especially in countries and economies and regions such as the one that I'm coming from. I'll conclude by saying women in South Africa, it is not regulated, but it's probably an unwritten requirement that there should be a 50% representation of women in government and similar governance structures. The rules are not as stringent insofar as the private sector is concerned, but the push continues to be there. So the women agenda is inevitably going to be right there in terms of the top priorities. Thank you.
Thank you, Busi Mabusi. We have a little more than 10 minutes for questions. And before I go to the floor, I've had a question that's come from off the floor, and it's directed to Sam. Matthew, could you just give us, the question is, are there a couple more examples you could provide related to digital trade and how that can help advance the things we're talking about today?
No, absolutely. And look, there are 2 or 3 things I can say. One is, if you look at the United Nations model law for electronic transfer records, less than 10 countries have adopted it. Okay, so the electronic, to do away with the paper in trade, we need countries to adopt e-laws. So Singapore was one of the first ones to do it. The UK did it last year. So, and there are less than 10 countries I can count as of now. So we need countries to adopt Electronic Transactions Act into their laws, because otherwise you are relying on contract law for trade, which will require paper. So that's one. Second, I think Jose touched on the B20 recommendation on a single customs windows. I think ASEAN as a bloc has done some good progress, led by Singapore. I think we need regions to come together and do that, to do away with the paper, especially for customs purposes. And the third thing I will say is something that I feel is we are kicking the can down the road, which is the moratorium on taxes for electronic transmissions, which at the last ministerial was, the moratorium was extended for 1 more year. I think that should become permanent, because by definition, trade is cross-border. If you start taxing data flowing between borders for trade purposes, then I think that's a non-starter. It will have a significant punitive impact.
Thank you very much for that. So let's turn to the floor in the room. I'd ask if you raise a question. First, let me recognize you, raise your hand, say your name and affiliation, and ask your question, and direct it to a panel member if required.
My name is Vera Torsis, and I'm from Brazil, and I'm also the chair of the G20, the think tank G20 group on trade and investment. So congratulations for the work of the B20. And I'm following the work, and I can say to you that the conclusions and suggestions that the group of G20, the think tanks, is around 120. Can you imagine the big effort to put all the ideas together? And the main conclusions, and I think it's important to say in this house, is the centrality of WTO for trade. That is, it's unacceptable that we have a house that's not working for more than 30 years. I'm following this. For 30 years after the round of Uruguay round, no more agreements were agreed in this house, because one country is blocking it and support of some others. So in our world, we are living in a geo-economic world where the rich countries do what they want, but developing countries are suffering because of there's no rules, if there is no more rules. So my suggestion for the B20 is to put this with much more emphasis, because G20 is doing it, showing the centrality for all the suggestions that you need, digital woman, Hungary, and anything you want. It is important to have to put the business and the academic group pressing and say, look, countries, big countries, G20, look, we need the WTO. And it's funny because I read all the declarations of the G20, and they put WTO, but the G20 suggests the reform of WTO, something like that. It's ridiculous. The phrase that included in the final declaration, the phrase must be much stronger. And I think that they need the support of B20 and G20 to do this. Do it instead of just another soft phrase.
I'll ask Jose Salvador to respond.
Please.
I think you're pushing on an open door, madam, but I'll let him respond.
Vera, thanks for the question. It is absolutely central. Brazil, during the previous cycles, our participation on the B20, we were quite advocating very eloquently about the need for having this house as the center pillar of the global trade. It's not a coincidence that we decided to have only 3 recommendations instead of 12 in the past cycle. The first recommendation is to solve, and I'm using the words of the DG, the crisis of the WTO. Okay, so that's absolutely central. So that was the first initiative that we took. The second initiative, and I think that was as important as the first one, was the fact that we have closed the document end of May. We were the first cycle to close the document in the first 5 months of the year. And this gave us a lot of time to connect and to implement a very strong advocacy plan, talking to the various governments. So we are speaking with all of the co-chairs to speak with their representatives to the WTO, with their representatives for the G20 for trade, and to make sure that this message is conveyed. Of course, it depends on the agreement of all the countries, but I think we are doing our part in making sure that this message is rightly conveyed.
Yeah, we can pull that up, I think.
Yeah, we're going to present the 3 recommendations I spoke on my. It's pretty much one, improving global governance. That's the one related to the WTO, to the resolution of the crisis of the WTO. Second, promoting a more sustainable, resilient global trade, the resilience of global value chains. And the third one is the efficiency part, right? So the integrations, authorized economic operations, interoperability, and things that would streamline the process of the WTO flux, the world trade flux.
Lucy, you want to come in on this one?
I just want to support my colleague and say we will take this message very strongly to our country. And as already indicated, the reception is very, very firm and strong. So we'll be trying to carry forward the work that has been started already.
Okay, thank you. Other questions from the floor, please. We have a few minutes left. We'd love to hear your thoughts and inquiries. Jose.
Can I just say one additional comment, which is lessons learned, at least for me, during this B20 cycle. We've been investing a lot of time and energy. Not necessarily the country that is blocking certain position at the WTO or international trade, the position from the P20 member from that country converges with the position of the country. Okay, so this brings the B20 a very interesting dynamics. So we can agree on points that sometimes it is harder for the governments to agree. We can be more outspoken, we can be more assertive in these positions. This is the reason why one of the recommendations on the document that you're going to be able to see is to make sure that the B20 is closer to the WTO, that we are more active and presenting the position, participating of some of the committees, for example, when applicable.
We have a question. Please identify yourself and your affiliation. Don't forget the microphone.
Microphone.
And my question is about the discussion that Renata and Samuel had about the trade finance gap for women. You mentioned some solutions that we can have looking outdoors, like for digitalization and capacity building, and that's important. But I'm thinking about the homework that finance institutions and banks can do internally for the gender gap, the gender biases in the process. And for example, it could be, Renata mentioned the collateral challenges. For example, in some jurisdictions, women face challenges because their property are in the names of their husbands, and they face more challenges to get access to finance. So maybe how do you see this inside a bank, like in a bank institution, to provide tailored solutions, credit solutions, to thinking of those gaps?
Yeah, and a good question. And that this is why one of the points I'd mentioned was the banks, like Standard Chartered Bank, we recognize this. And therefore you need to almost carve out some appetite and some funding to support these businesses, right? So that's why I said we have an initiative called Standard Chartered Women's International Network Initiative, SCWIN. So we plan to deploy $1 billion of loans to women-only businesses in the MSME segment. And the criteria for doing that and the requirements for doing that are going to be different to what we normally apply, right? So there's a preferred way of doing this for select women-led businesses in the MSME segment. Now, if there's multilateral participation into that, then you can multiply that even more. This is just Standard putting money on the table. But other banks need to come in, multilaterals need to come in, and then you can expand that program.
Thanks. Renata, you want to come in on this one?
No, just I think a quick comment. Being from in the government side now, being always in the private sector, I think we have a lot to learn with private sector banks. What we have been doing is trying to bring the private sector banks or the private arms of the banks like IFC, IDB Invest closer to the public side of the banks. Because I think we have a lot that we could implement in public actions from development banks. And what we have been doing, at least from our part at the Ministry of Planning, we signed gender agreements with all the development banks, the multilateral development banks that finance projects in Brazil. So we are building an alliance with the banks, and also, and that is because one of the reasons of that is because women is a cross-cutting agenda in our multi-year plan, 2024-2027 for the federal government. So the gender perspective has to be considered in every public policy that we build till 2026.
Thank you, Renata Amaral. We're just at time, but we have one question in the back. Please, sir, identify yourself and ask your question.
Thanks very much. Steve Altman, New York University DHL Initiative on Globalization. Thank you all for an excellent panel. Very useful. Mr. Serrador spoke of the barriers posed by data localization requirements and the importance of data free flow with trust. I was wondering if any of you would be able to elaborate a little bit more on the challenges posed by the data localization requirements practically in business and on the path forward for this data free flow with trust. Thank you.
Maybe I can before.
Yeah, I'm not an expert on data localization, but let's.
So purely from the private sector, one of the challenges, for example, is with technology you can, whether it's AWS or whichever cloud provider, you can centralize and have economies of scale in terms of data centers. For example, as a bank that operates in 40+ markets, you could have data in 2 or 3 locations, all on the cloud, right? Virtually on the cloud and physically on the cloud. But when you have data localization requirements, you then require to actually solve for that particular country only with a local data center. That is a significant cost implication for a private sector lender like ours, for example, and it applies to anybody because it's a local regulation. So when you have 4, 5, 6 markets insisting on that, it significantly raises the cost of doing so.
Yeah, and just if I may just add, if you take, for example, developing countries, there is a trend for establishing, for example, in the Brazilian Congress, there are bills of law being discussed that oblige that data centers are located in Brazil, so companies do business abroad. And for example, for a company such as Embraer, it would be much more expensive than centralizing the global operation of the company into one single place.
Okay, thanks. So we are at time. A microphone, please.
Just to add to that point, I think
Who
it
are you,
might be.
sir?
Sorry, my name's Neil Shonard. I'm the CEO of a technology company that does cross-border and domestic trade finance fraud prevention.
Thank
So
you.
we're quite in the data space. Just for the interest of everybody in the room, both BIS, the Bank for International Settlement, and the World Economic Forum both have global cross-border data trade sharing initiatives at the moment. And if anybody's not aware of that, it might be of interest to you.
Thank you for that. So I've always wanted to use one of these. It's amazing. But I'd like to thank our amazing panelists for their insight. Some great questions from the floor. And I must tell you, at some complexity and minor expense, we do have coffee outside. For those of you who thought that these things were coffee, they just have water, but outside there's a coffee and pastry table. Please help yourselves and mingle. And I hereby declare the session closed. Thank you.